And then we're going to complete Chapter 8 in Principles 1, counting 2310. Principles 1, we're going to do some cash, some bank statements, some bank reconciliations, okay? Not statements, but this is essentially a digital copy of a bank statement, or somehow how it may look, okay? So before we start, I'm going to say a little quick little devotion for the day. It's just to get you on the right train of thought, and hopefully it'll mean something to you. It is Wednesday, April 1st, so it's April Fool's Day. Not that there's much to fool around about today with the seriousness of the people of the pandemic that we're dealing with. Here's our devotion. This is from J.J. Hanna, lives in Colorado. It's that time of year when rain and wet are the only constants. Preparing for the day's weather comes down to two options: sandals or rain boots. In the same way, rain brings one of two moods: childlike joy or grumpy retreat. I don't know, for me, being an older guy, it's grumpy retreat. But anyway, as I walk in the rain, whether I'm prepared for the weather or not, I have a choice. I can either be annoyed every time I get a little wet, or I can jump in the puddle and enjoy nature's spontaneous splash pad. The same is true of my attitude toward what God is doing in my life. I can gripe about my circumstances and groan about what's in my path, or I can shrug and jump feet first in the puddles along the way, taking joy from the little things and thriving on the journey. Okay? I think it's really a good message for today. You know, with everything's so negative, it seems like it's kind of good to have a little positive. Have a little, just know that you can stop and, smell some flowers, or, take your dog for a walk now with nobody else because you don't want to get, infested. but you want to social distance as much as possible, but enjoy the little things that you can do to make your day a little bit better. If you want to conflate that, it makes no sense to, but if you want to conflate it to a movie, one of my favorite movies, it's a silly movie, it's Zombieland, right? What's the moral? What's one of the rules at the end? It's enjoy the little things. When Woody Harrelson gets his Twinkie, right? Gets to enjoy the little things. So put it all into perspective and try to enjoy what you can from the day. But anyway, let's dive into Chapter 8. So the bank statement, ultimately, it's a pretty straightforward thing to do. The problem is some of the pieces of the puzzle get confusing, okay? In terms of what I'm talking about, statements, but bank reconciliations. So what's on the screen now is essentially a digital copy or a digital presentation of what a bank statement may look like. Now, your bank might be totally different, and you may not ever get any mail from a bank because it's all done through email now. It used to be this was all done paper, but regardless, this is how a bank statement may look. Okay, you've got the name of the company. This is Video Buster, so obviously it seems like it's kind of old. Who has a video store anymore, right? Like Blockbuster. So here's the name of the company that has a bank account. There should be an account number somewhere. Do I see it? That's over here. Account number. Here's the date of the statement. We got our previous balance. That's what you can tie into the previous statement. You've got your, now look, this is checks and debits, and this is deposits and credits. One thing you're going to hear, you might catch on to, is when you talk about banks, it's the debits and credits are reversed. Okay, so if you want to add money to your account, okay, what do we do in accounting? We debit our account. Okay, but the bank, if the bank adds money to your account, they're going to credit your account. So it's going to get confusing. Hopefully I won't get too messed up with it. But so when you see here deposits and credits, okay, the bank is putting money into your account, which sounds totally opposite of what we're used to. Okay, a deposit to us is a debit. Okay, to the bank it's a credit. Why? Okay, maybe you're asking why. Maybe you don't care. Well, if you think about it, the bank is holding money for us. Okay, so our money at the bank is a liability for the bank. So that's why it's flipped, really. Okay, I don't want to get involved in that. I just want to just know if the bank is going to add money to your account, the bank's going to say, we will credit your account, and that's how they say it. Okay, you probably have heard that before. Okay, if they're going to remove money from your account, your cash account, they're going to debit it. Okay, and that's what sounds totally different, and it is from what we're used to. All right, because in we do T's. When you add money to account, you debit your cash account to add to it. You would credit it to subtract from it. So don't get hung up on that. All right. So here's our previous balance. Here's what we've taken away. Here's what we added to. So you see the ending balance is about $400 higher. Okay. Then down here is a list of activities. If you see a number, obviously that means it would be a check written. Okay. Now, one thing you can notice, because checks are pre-numbered, okay, there's 121, there's 122, there's 123, 124 is missing, okay, so is 126, okay, and that could be something that we have to consider when we do bank reconciliations. We probably wrote those checks, and they just haven't got there yet. Okay, you've got some other stuff over here, DM, which down here tells you it's a debit memo. We won't really discuss debit memo in class. EFT is an electronic fund transfer. It's like an ATM visit. NSF, non-sufficient funds. Okay, it's a fee for not having enough money whenever you try to take some money out. Excuse me. Another EFT, so we did a ATM deposit, which some people do those. I've never done one. But anyway, and there's a credit memo, and there's IN, which would be interest income, interest earned on our account. So we may see some of those. For the most part, what we're going to do is just do the reconciliations, and it's going to kind of tell us, what's going on. We got to figure out where it goes. All right. This slide here will help you a lot. Okay. This might be where you want to refer to when you do some of these. Now, there is some problems with these bottom ones. They're add or subtract, so that means we got to do this. We got to use our noggins, right? But for bank recs, we got these bank adjustments, and we got book adjustments, okay? I'm going to show you my chart, and I'm going to kind of erase it and try to explain a couple of them. So this is what, when we have adjustments to make to our bank or our books for the cash balance, it's because of these reasons. So over here on this book balance adjustments, you have add interest earned and unrecorded cash receipts. You would subtract bank fees and NSF checks. And then if there's an error, there could be an add or a subtract depending on the error that we made, okay? Now over here, because it says book errors, that means the bookkeepers, us accountants, made a mistake, which I never make mistakes. You might. But anyway, over here on the bank side, okay, deposits in transit, we will add that to the bank number. We will subtract it from the, we will subtract outstanding checks. And down here at the bottom, we will add or subtract corrections of bank errors. Okay, so again, sometimes the bank will make the mistake, not us. And we will have to add or subtract it depending on how the error is made, okay? So I'm going to pull up my chart now. It's full, okay? I'm not going to lie to you. It's got a lot of writing on it. And I might make my screen bigger so you can see it good too. Let's do that. Look how beautiful I am. All right, here we go. This is kind of all explained out, so it's going to look scary at first. I'm going to try to go through it. Ooh, look at all this writing. Look at let me fix this camera here. What can I do with this? Well, we'll have to do it like this. So, get this mouse out of the way. All right. Woo. Whoa. There we go. Okay. So over here is where we have we'll get a number from the bank statement. Okay, we'll have a number that we get from the bank statement, which is how much money they say we have. Okay, the number from the bank will be on the bank statement, and that tells us how much the bank says we have at that moment in time. Now, sometimes it's not going to agree with what our books say because of timing differences. Okay, it will fix itself over time, but it may be timing differences at the time of the bank statement. All right. So, where's my hand at? Here it is. Okay, I'm on the wrong side. Okay. So, what we would add to the bank balance, if we need to, will be deposits that are in transit. Okay? So, the bank statement is going to be written on a certain day. All right? So, we'll say it's just the end of the month. Okay? We'll use today as an example since it's April 1st. So, yesterday, assuming we weren't shut down because of the virus, if we had a business at the end of the day, we would have a deposit to send to the bank from today's cash collections, okay? We would fill out a deposit slip. Let's say we close the store at 8 o'clock at night, okay? Well, 8 o'clock at night, guess what? The banks are closed, okay? But we still don't want to hold on to that money. So what typically will happen in a retail situation is you'll fill out a deposit slip, and you'll take that, you'll put it in some of like a locking bag, and you'll take that locking bag to the bank, and they have a special drop box where you can drop these deposits. And it's like you pull it out, you put the money in, you push it shut, and it gets slid down into the safe area where nobody can reach your hand in. You pull it back out and check, okay, it's gone. The bank's got the money. Okay, so if it was $100, hopefully it was more than that, but if it was $100, I would have already added that $100 to my book numbers. Okay, this would be yesterday. It was on the 31st. But the bank won't add it to their number until it clears the bank, until they get there the next day, open it up, count it, and deposit it. So if at midnight they do a bank statement, well, they're going to be like, we don't have this $100 because we don't have it, okay? Because it's still sitting in that box, that drop box. So that's what I'm trying to talk about. This is all timing issues. It'll fix itself the next day, but because the statement is cut off at the end of the night, on the 31st, then when you see that April 1st bank statement, they're like, we don't have your money, okay? They just haven't counted it yet, okay? So, now, so there's the adding the deposits to the deposit in transit, okay? The adding deposits that have not come in yet, or we haven't counted yet, added to the bank amount. We've already added over here, so we want to add over here to make this thing all work, okay? Now, we'll talk about that there in a minute. Now, down here is like an outstanding check thing too, right? So outstanding checks, we subtract that from the bank. If I write a check for $100, okay, I'm going to immediately subtract it from my bank total. Some of you may not do this on paper, but if you go to like if you were to write a check, you had $1,000 in your bank account, you wrote a check for $100. Okay, you want to make sure you don't write another check for $950 because you wouldn't have enough money to cover it, right? Because you will only have $900 in your bank account. Even though the check may not have gotten through the bank yet, you still would want to not write a check for $950 because you wouldn't have that much in your account. All right. Now, the bank can make errors. It's usually pretty rare, okay? And depending on the error they make, if they take too much money from us on accident, then we'd want to add it to the bank, because when the bank figures out the error, they will add it back for us. And then down here, if the bank gives us money they weren't supposed to, this is what the bank gave us money they should not have. My handwriting's terrible, okay? The bank gave us money they should not have. So if the bank put money in our account that wasn't for us, it was a mistake, okay, we want to subtract it out because the bank's going to figure it out and take it from us anyway. We don't want to spend it. All right? So that's the bank adjustments. Now, the book side looks a lot more complex. Let's see if I can do this. Okay? We've got the book. We will add interest earned. So if we open a statement and we see we earned some interest, we want to add it to our numbers. Okay? If there is an error in the books where we took too much out, then we want to add it back. Down here, bank collects money for us. It's pretty rare. I got low in space here too, so it's kind of run together. If the bank were to collect money for us, we would want to add that to our amounts because we wouldn't know they collected it until we saw it on the statement. Okay, that's the reason for it. And then down here, NSF. Okay, if we write a bad check, which we would never do that, right? But if we were to write a bad check, we would have to add it back to our book account and write that check again. Okay? Now, down here, the subtractions, bank charges. Okay, sometimes the banks will charge you a service fee for every month. Sometimes it's called a check printing fee. Sometimes it's because you don't have direct deposit. They'll charge you, $2 a month or $8 a month, whatever it might be. Usually, if you have most students have free bank accounts. Once you are no longer a student, they might start charging you money. Usually, there's reasons for it. If you find out what the requirements are, then you can not get a charge. Like I have one account where, as long as I transfer in some money, and it can be like a quarter, if I send 25 cents to this account every month on a certain day, then there's no fee. So I just have an automatic payment to that account for whatever. I think it's like $25 for. It's a savings account. But anyway, there's usually ways to have no charges for a personal bank account. Businesses may be different because they still want their checks printed out and sent back to them, whatever else. If we make a book error where we did not subtract enough, then we would have to subtract it from the book account from the book balance now. NSF fee, if our customers were to bounce a check, then that would be a subtraction from the book number. So this is probably all pretty confusing right now. So we're going to go to the quick study number 3. It's going to take me a second to get there. And we're going to try to talk through it. But when we get to 4 and 5, I think it's 4 and 5, then we're going to actually do some, and hopefully it'll clarify this a little bit. Okay? Make myself small again. I can close this. Where am I at here? Here we go. So let's get to the right section. All right. I should have had this queued up. I'm sorry. Let's see. Unit. Quick study. Okay. Okay. I think I said 3. It's section number 5. Okay. So this is kind of a recap of what I was just talking about. Okay. Now it's going to look kind of confusing the way it is. Okay. I'm going to try to refer to my board to see if we can locate these. The first one is interest on a cash balance. So what you see on here is interest earned is right here. I guess you can kind of still see that, right? So it's going to be an addition to the book. So plus to the book. So this first one here would be to the book. And it's going to be an addition. Okay. Now the question here is does it require an entry? We love journal entries, right? I mean, I go to bed dreaming about journal entries. The answer here is yes. Okay, and here's the reason. Anything that we do on this side, the book side, if we do anything on the book side, it will require a journal entry. Okay, and because this is on the book side, it will indeed require a journal entry. The next one is a bank service charge. Okay, that's also on the book side. It's right here. It's a subtraction from the book. Book subtraction. Okay. So this will be book subtraction, and because it's on the book side, it will require an entry. Now C is just another form of B. Okay, it says minimum balance bank fee. It's a different type of service charge. So actually B and C have the exact same answer. It's in the same spot on my chart too. So this will be a book. This will be a subtraction. This will be yes. Okay, it's on the book side. Outstanding checks. All right, so now we're over here. It's a bank subtraction. Bank subtraction, right? All right. So this is on the bank side. And it's a subtraction. Whenever it's on the bank side, we never have to do a journal entry. We never do journal entries for the bank, okay? So this would be a negative over here, so no. Okay? Collection of note by the bank. Alright, here we go. This is tough to find. It's not necessarily worded exactly the same, but bank collects money for us. Okay? That's an addition to the book. Addition to the book. So book addition. Yes, it will require a journal entry. Now, if you look at my chart, I've got NSF here and here. Okay? The actual... let's go back to the slideshow, though. It's already closed. Good work. Alright. On this chart, we'll use this chart to answer this question. Subtract bank fees and NSF checks. It's a book subtraction for NSF checks. I want to make sure we get this right, so instead of using mine, I don't think we ever really do any problems where we bounce the check. So we'll just use what the book says, is that the NSF goes as a subtraction from the book. Okay? So back to this. Book, subtraction, and then yes, right? Because it's a book. If it affects the book, there must be an entry. The last one here is outstanding deposits. I called mine deposits in transit. That's the same thing. Okay, so it's an addition to the bank. Okay, so bank addition, bank addition. No entry required when it's the bank side. Okay, check my work. Outstanding deposits. How can it be a subtraction? I think it's a mistake. Outstanding deposits. That looks like it's a mistake to me in the software. Outstanding deposits is definitely in addition to the banks. That's going to be an error. It's got to be an error to the software as far as I'm concerned. Maybe I'm mistaken, but I feel certain because it would be the opposite of this one. Outstanding checks is the opposite of outstanding deposits. So it appears to be a problem with the software, guys, so be careful with that. We have a bug in the system. All right, here we go. So this is an actual, it's a very small little bank record. We're going to do two of these real quick. Let me erase my board here. Okay, so if you need the board to refer to, you have to go back in the video and look at what I had on the board. So let's look down here at this bottom first. Give you a second to look at this while I get this going here. So I have this formatted just like my board was, okay, where I've got those four kind of sections, the four little quadrants, okay? So over here is the bank statement, the bank balance. So my additions over here, what are the possibilities, okay? Up here would be outstanding deposits and bank error where the bank takes away too much money from us, okay? Subtraction or deduction, there's two things that can go down here, which is outstanding checks, or the other one being bank error where the bank took or the bank gave us money that they weren't supposed to. Okay. On the book side, okay, the book balance is going to go here, but we'll have additions for. There's really three things: interest being earned. The second one would be where the bank collects money for us, and then the third one would be a book error, where we took too much money out of the bank that we made an entry where we made a mistake and we ended up taking too much money out of the cash account. We need to add it back. Okay. Now down to the bottom, our subtractions from the book balance will be bank service charges, NSF fees, insufficient if a customer bounces a check, and the last one could be where we have a book error where we did not take enough money out of the bank, out of the cash account. Okay. So, all right. Let's start by pull this thing apart. It says that Nolan's company's cash account, that's going to be our book account amount. Our book balance for Nolan's cash account is right there, $22,352. Okay? Its bank statement shows a deposit that we have $21,332 on hand. So the bank statement shows this amount. So our bank statement amount is $21,332. Okay, so there is a difference. The difference can be explained with these 5 problems. Okay, these 5 timing differences, or 5 things that are affecting the difference. Okay, so the first bullet point A, or the first thing, is an outstanding checks. Okay, outstanding checks. And there's the amount, $3,713. Remember, that goes as subtraction from the bank. Okay, go back and look at the slideshow. Okay, right here, subtract outstanding checks. Okay, so let's go back to that, and we will do outstanding checks. Okay, and that's going to be $3,713. $3,713. Okay, you see it did subtract it. I don't have to put it as a negative number. It subtracted it. Okay, 21 down to 17. Definitely subtracted it. All right. So there's the first one. The June 30th bank statement shows bank service charges of $41. Okay, we didn't know that they charged us that until we opened up the statement. So we need to, we have not recorded these, so we need to record them now. So we need to subtract them out now. The company needs to subtract $41 from our bank account because the bank charges service fees. So down here we'll have our subtraction from the books. Bank service charge, $41. Okay. There we go. Let me have a little sweet sip. All right. In reviewing the bank statement, a $90 check was written by the company, was mistakenly recorded in the company's books as $99. All right. Let's come back to C at the end. Okay, let's do D first, because the D and E are much easier. So D, June 30th cash receipts of $47,240 were placed in the bank night depository and were not recorded on the June 30th statement. This is an outstanding deposit. It's a deposit in transit. Okay, so this is going to be our June 30th deposit. We're going to add it to the bank because the next day when they open up the doors, they look through the big old piles of cash, in not cash, but in the packages of cash of businesses. They're going to open ours up, they're going to count it, and they're going to add it to our account. So this would be $47.24. Then this one, then in part E, the bank statement included a $23 credit for interest earned. Is that specifically on here? Yeah, add interest earned to the book, okay? So, interest earned, okay, that's $23. $23. All right. Now, so, I think I can just do a cash T here. Let's go back to C. It says, in the bank statement, a $90 check written by the company was mistakenly recorded in the books at $99. Okay, so in our books, so we wrote a check. Nah, can't spell now. Okay, we wrote a check for $90. Okay, we wrote a check for $90, which means whenever it clears the bank's going to subtract $90 from our bank account, assuming that the bank does not make a mistake. All right. The problem is, it says that we mistakenly recorded it in our books at $99. So whenever we entered it into our books, we subtracted $99 from cash. Okay? Now, we're not going to take an eraser and fix it. Instead, we need to do a debit to cash for $9. So whenever we do that, now the net effect of that check will be a $90 reduction in cash, which is what it was supposed to be in the first place, right? So what I need to do to get this to work is to add $9 to the book number. I'm sorry, the book number. We need to add $9 to our books, so it'll equal out in the long run. Okay, that's confusing, right? That's why I said that's why it's tough. This is why I wish we had the classroom environment so before I can go over these and answer your questions live. So we need to add to our books this error. Recording error on a check, $9. Now, am I right? I can check my work, but am I right? The ultimate goal of these bank recs is to show that our adjusted bank balance equals our adjusted book balance. And as you can see, mine do in fact agree. Okay, these numbers should match if you've done it correctly. Check my work. I'm sure it's right. Boom, answer's complete and correct, okay? So you can definitely, you're going to want to use this as you go through your homework, okay? I got hiccups again. Number 7 is a lot of the same, okay? It's very similar. It's a different problem. Got a few different, most of the stuff is the same. There's a little bit of difference, okay? All right. So the first thing is organic foods cash account shows $5,500. That's going to tell you how much is in our bank account per our books. So it's going to be our book balance. And then here it says the bank statement shows $5,160. So the bank statement balance is $5,160. All right. So let's go through these. I'm probably going to we'll do them all in order. It's fine. The first one, August 31st. This is good. Cash receipts were placed in the night depository, so it's going to be a deposit in transit. So we deposited this amount. We added it to our book balance, but it's not going to be on the statement because it hasn't got to the bank yet. They haven't opened up the bag and counted it and added it. So this is an outstanding deposit. We're going to call it the August 31st deposit. So whenever they count it, the bank's going to add to our account $1,240. The bank statement shows a $120 NSF check from the customer. That company has not yet recorded this NSF check. Now, I had on my board how to handle that. It's also right here. It says subtract NSF checks, okay? So down here, we'll do NSF check as a subtraction from the book, $120. Outstanding checks as of August 31st, okay? So remember, we subtract outstanding checks from the bank balance. So this could be down here, outstanding checks, $11.20. Now let's look at D. Okay, so D, it says in reviewing the bank statement, an $80 check written by Organic Fruits was mistakenly drawn against Organic Foods account. Okay, so this is where the bank made a mistake. The bank took money out of our account that they were not supposed to. So obviously when we see it, we're going to call and complain, at least as long as our accountant is confident enough to notice that there's a bank error, okay? These are pretty rare. They do occur. And what we would do is call the bank, say, hey, you made a mistake. Please check this. They're going to say, oh, yeah, we did. We made a mistake. And they're going to add that money back to our bank account because they took it by mistake. So in this case, where the bank makes the error, they take too much money from our account, we're going to add it to our account because once we inform the bank, they're going to add it for us, okay? So we're going to add it now. So this is that bank error. We're going to add it to our account because the bank's going to have to give us that money back because they took it by mistake. Okay, lastly, the August 31st statement lists a $20 bank service charge. This is a simple subtraction from the books. So down here is a subtraction from the books. We will do bank service charge in the amount of $20. And lo and behold, my adjusted book balance equals my adjusted bank balance. Okay, I said those backwards, but you see that they are in agreement. Okay, they're in agreement. All right, so there's your two examples. They're fairly symptomatic, or fairly simple, except for one or two things where you gotta really use your brain and say, well, what really happened here? Which is the bank error on this one, and on the previous problem, it was where we had a recording error in our books. Okay, the rest of them are all just a matter of learning where you put them, but those two you have to actually think about how it affects our balances. Okay, so do these two homeworks. There will be a bank rec that's probably a little bit tougher than this on the Unit 4 assignment, and I may do one similar to that in a special session once we finish chapter 9. Okay, before it's due, I'll probably do an extra help session with the Unit 4 assignment. Now it's going to be different, a little bit different than yours, but ultimately it'll be the kind of the same concepts. All right, guys. On the I gotta get you a question too. What's our question going to be today? Let's see. Our question for today, let's pick something silly. How about that? Let's go with something silly like favorite movie. So your question for today, I got to put it up, all right? Actually, I think it's already there. Your week 2, question 2 is for you to tell me your favorite movie. Let me see if I can think of mine. What's mine? Ooh, I don't know. I guess probably the go-to is the old-fashioned Star Wars from 1978, but that's kind of lame, right? What's it called? Episode 4? New Hope? That's good. I guess I would go with that. I was a big fan of Caddyshack. It's an old comedy. If you haven't seen that one, that's a good one, too. But anyway, in the discussion board, your week 2, question 2, is to simply tell me your favorite movie, okay? And I look forward to seeing your responses to give me a little bit better idea of your personality, I guess, or what you're kind of into. So we'll do favorite movie for week 2, question 2. Again, I enjoyed it. I wish we could do this live in the classroom. I miss y'all's faces. Be safe. Social distance, like they asked you to. Be wary of your, you don't want to get your grandparents sick. You don't want to get your mom and dad sick. So try to be boring. Stay home. And God bless you guys. And I look forward to talking to you guys again on Monday. We'll start chapter 9. So enjoy the weekend. We'll see you Monday for more accounting bliss. Have a great weekend. God bless.